Profit targets by delta. 0 DT options. This is in our 0 DT series. But given the speed and the number of 0 DT trades, maintaining high probability mechanics can be the key for success. We asked the research team to say, how do you select the right profit target for 0 DTs? Because that's the big question we get. How do you select the right profit target? 18 months worth of data. We looked at everything from 50 delta straddles, selling both to far out of the money, 10 delta strikes. This study has a gazillion pages of research. You can't go through it all, but you're gonna we'll get to a spot which is really interesting. We considered hypothetical traders who would leave losing positions alone and close winners until using profit targets from 10 to 45% of the credit. All trades were assumed to exercise or close at the mid price. Go to the next slide, Beth. So the mid price is a little bit, it's probably unfair. So you got to give up like a nickel or a dime. So we wrote on here, subtract $10 to $15 from the daily P&L values to account for buying power controlling the long strikes to get realistic results depending on how much capital you commit to your 0 DT positions. So basically what they're saying is if you have to buy the wings for capital reasons, subtract $10 to $15 a day.
Got it.
Anyway, we looked at
most do, right?
We looked at the worst 5% of all outcomes. We looked at the average time of the day, central time, to close the trade. And we looked at the percentage of profitable trades. All right, let's do it. Let's do it, Beth. A lot of stuff here. There's like 10 slides, so I'm not going to go through everything in detail, but the first one we're going to look at is straddles. Now, straddles, the reason that's selling the put and call at the money. Now, here's what's important to note, and this is really easy for anybody to see. The average time to exit, we got really granular on this thing. The average time to exit, if you sold them on the opening, is 10:06 in the morning. You can't ask for more context than this. 90% win rate, you make $60, and you average at you have average getting out by 10:06. And 87% for the 15% profit target, $116 getting out at 10:37, and the last one was at 84%, $117 getting out at 11:08. After 11:08, everything starts to go downhill. So the whole answer here is you've got anywhere from an hour to 2.5 hours. That's it. If you're selling straddles, that's it. That's all you got. You got an hour to 2.5 hours.
And you're on your own. You're flying blind kind of thing.
That's the best we can do for you. Let's go to the next one. We're going to go to strangles. And we start with strangles, and you can see the same kind of thing. This is how granular we got. 93% success rate, closing at 9:51 in the morning, an hour and a half after the opening. At the 20% profit target with an 89%, and the best P&L was at 10:40, so 2 hours after the opening. The takeaway here is that you've got between an hour, hour and a half, and 2 hours. That's it. Life's over for the 0 DTEs. If you want the high probability of success, and we put the actual times down here. Everything starts to fall apart later on in the day. Let's go next slide.
We've always talked about how, if these trades work, they work early. You should look to get out of them earlier too.
As you can see here, when you start going down to like the 30 delta strangles, the time to exit starts getting earlier. So this is 9:46. Down from 10:08 to 10:56 to 9:46. And all the other times get earlier. Now, could you stay a little bit longer, make a little bit more money? Sure. But the bottom line here is we're getting out early. We're not holding anything. The negative numbers are at the 35, 45%, 50% profit targets.
A lot harder to do. It's easy to say this, right? Because when you're looking at a loss early in the day and that, you're kind of behind the 8 ball, at this point, you're like, all right, what do? I know what I'm supposed to do. It's very hard to pull the trigger.
At 25 delta strangles, the 10% profit target, it didn't really work out that well, but the other ones all were okay. But you have to get out early. Again, first hour and a half. And we're going to go down to the 20 delta strangles. This is kind of the area we live in. These are tough. But you're still, to make money, you're holding till about 10:30. So what are we learning from these slides? We're learning kind of the 2-hour window. This is our window. It's a 2-hour window.
Yeah.
Now, I like doing it when the VIX one day is really high because I think that gives you a lot more edge. Let's go to the next one, Beth. And this is the 15 delta strangle. So you can kind of see the same thing here. There's not much money to be made. You got to kind of wait about 2 hours. And the win rate's really high, but the losses, chew up into those profits. And so, the win rate's high. The win rate's in the 90s. So you guys got the kind of the picture here. The close to the money positions perform best when closed if the short options reach 20% of max profit. With short strikes, 35 delta to 20 delta, 25 to 30% profit targets are better performing. In general, the closer to the at the money, it's more important to be willing to get out rapidly. Well-performing mechanics tended to exit winning positions between 10 and 11 a.m. Central Time. The riskier strikes benefited from safer management, while higher pop short strikes were better off being allowed to run slightly longer to collect a larger portion of a smaller credit. The bottom line here is you got 2 hours. And depending on the strikes that you select, you should set your expectations around that. You're going to make less money selling further out of the money options, but you're going to take less risk too.